right, thanks everyone for joining today. Today's webinar, we're on our monthly webinar series here. We're going to talk about accounting for payroll. We certainly know that payroll is an important part of our accounting process, and we're going to go a little bit into what that looks like and how to keep track of things. So we'll talk about why accounting is important for making sure your payroll is accounted for appropriately on your books. We will talk about what are the different types of accounting systems, look at the different components of payroll, and then we're going to finally kind of pull that all together and talk about how to post your payroll in your accounting system, right? So we'll get started here. We all know that payroll is an important part of the accounting system, of course, right? We know that there are expenses and liabilities and all sorts of that fun stuff built into payroll. It's always one of your large businesses' largest expenses, so it's important that you're tracking it and reporting it appropriately, because you want to make sure that your CPA can deduct everything appropriately at the end of the year. There are a lot of things that need to tie together in the accounting system, right? So all your wages should tie together with your W-3 report. Your W-3 is the tax report that we do at the end of the year. We make sure that reconciles on our end, but you want to make sure that it reconciles on your end as well. Your accountant is definitely looking for that because when they file your tax return, the wages on your corporate tax return need to match the W-3 and need to match all the reports that we file. So it's important to make sure that that all ties together. It's also important to make sure that you're tracking any liabilities, including taxes, employee liabilities, things like that, because ultimately you as an employer are responsible for those. So it's really important that your books are up to date and you know what you're looking at as you are tracking that. So, really important, we want to make sure that your payroll is posted appropriately in your books. Otherwise, you could run into some issues, year end with your accountant and just for tracking your own purposes, right? You want to make sure you're not losing money and things like that. So foundation of accounting starts with some sort of accounting system, right? Most of our clients are probably using QuickBooks. That's the most common small business platform out there, whether it's QuickBooks Online or QuickBooks Desktop. That's what most people are using. There are other systems, Peachtree, Xero, for example. Some larger clients may be using what's called an ERP system, an enterprise resource system, and that will be kind of integrating all their systems into one. But like I said, most folks are using QuickBooks, and what QuickBooks does is it tracks all of your income, all your expenses, your liabilities, make sure all your bank statements are reconciled, all that fun stuff. You want to make sure you have a great accounting system in general, whether that's you're doing it yourself or you have a bookkeeper that's doing it, or your accountant's doing it. It's really important to make sure your books are up to date, and having a good accounting system is the foundation of that. Gone are the days of having a shoebox of receipts and bringing them to the accountant. Life has gotten more complicated every day, and it's really important to make sure that you're tracking those things. So QuickBooks is a great first start. Like I said, there's other products out there. It's not the end all be all, but certainly having a good accounting system in place is going to be very important to make sure you're tracking things. Let's talk about the components of payroll, right? So we all know that we get these reports from paper trails. Every time you run a payroll, you get your payroll summary report, you get your payroll register, you're getting your deduction register, your liability reports. All of that kind of comes into play when you're posting things in your accounting system, whether it's QuickBooks or whatever it might be. We certainly know the payroll summary is a great place to start. That has all your totals in there. If you wanted to look at each individual check, things like that, you could look at the payroll register. If you are using department tracking or labor tracking of any type, there's labor allocation reporting that will help you do that. So if you wanted to see what your wages and taxes and expenses and so forth were by department, you certainly can do that as well. Certain level, many different levels of reporting are available. One thing that we can do for our clients as well is we can build you a general ledger template report. And what that will do is, as we get through this, you're going to see the last slide, the last thing we talk about is how to enter this into QuickBooks or into your program, right? We can kind of build that template for you. So you have a special report that shows you every payroll, how to kind of all the totals you need to enter into your accounting system, what that payroll is. So that's certainly something we can customize for folks. It's certainly not a perfect report. It require a lot of customization, but it is available. We do have a lot of clients that use that. There's no extra charge, things like that. But it's a really nice report to help you quickly enter your payroll into QuickBooks or whatever. Kind of puts everything on one page. It builds a custom journal entry just for you. So let's run through some of the components of what make up payroll, right? Not all of these are going to apply to every single employer. Some employers are going to have them, some employers are not going to have them. And there may be other things that are on that I won't even speak about that may be in your payroll, right? Everyone's a little bit different. Everything's a little more customized, but it's important to know, these are kind of the basics, right? The first one is bank transactions. Of course, we know that Paper Trails takes your payroll the day before payday. In that is all of the wages, taxes, any liabilities, any vendor payments we're making on your behalf. Our fees are in there. We take one lump sum out of your account for that. That's a bank transaction that needs to be posted appropriately. Because payroll is made up of multiple categories, many of which we're going to talk about here, it's important to make sure you're posting that the correct way and it's getting broken down the correct way. You can't just post that $10,000 withdrawal to payroll because it's made up of multiple things. And remember, I said your wages have to match your W-3, have to match your tax return, and so forth. So we want to make sure that that's all reconciling as well. You'll need to break that out, right? So the bank transaction is the first one that most people think of, but you don't just want to post that withdrawal to payroll, right? We got to break it down a little bit more, and that's where we'll do here. We may also do a credit transaction if we're doing a voided check or something like that. You may see a kind of a reversal, a credit transaction in there, which will give you, the money back, and you'll need to do a reverse entry, right? So you may have a deposit instead of withdrawal. So that's the first step in most people's interactions with us in their accounting system. When we talk about breaking that down, the first and biggest piece that we want to break down are our wages, right? Wages are always an expense to the company, okay? So on your books, you're going to have an expense account, expense category called wages probably, right? Employer wages, employee wages are just that. They're wages only. They're not reimbursements. They're not tips. Those are all different types of things, which we're going to talk about. But we want to make sure that your wages in particular are posted separately, okay? So regular, overtime, vacation, any of those wage categories are in there. If you have 1099s on payroll, those should be broken out separately as well, because those are going to be reported differently on your corporate tax return. So you may have a W-2 wages category and a 1099 wages category in your QuickBooks to break those out, but you definitely want to do that. We do see a lot of clients will break their wage category out by department, right? So if you are a restaurant, for example, and you want to have front of the house, back of the house wages broken down, you can certainly do that as long as your totals match, which is great. And now you want to use your liability report, labor distribution reports to do that. So that's something to think about. Remember, wages have to tie in with your W-3, which is what we produce at the end of the year, and they have to tie in with your tax return, your corporate tax return, when your CPA files it. So it's really important that those wages match all the time. So you want to break those down. The next item that everyone's always going to have is employer taxes, right? The bane of everyone's existence. We have to pay Social Security, Medicare, unemployment taxes on our employees when we run payroll, right? So that also should be broken down into a separate tax category, right? This is just the employer taxes. This is not the employee taxes. This is an expense to the company as employer taxes, and those you want to break down separately. When we look at other things, you may also have reimbursements, right? So if you're reimbursing mileage or office supplies or anything like that, those will be broken out separately as well. You want to post those to the separate expense categories, right? So if you're doing a cell phone reimbursement, you want to probably post that $30, for example, to utilities or your telephone expense account, right? Shouldn't go into wages, should just be put into that direct expense account that's there. So those are things to think about breaking out. Let's look at retirement and benefit matches. So if Paper Trails is making a retirement payment or a benefit payment on your behalf, meaning we are collecting the money from you and from your employees and sending a check, for example, off to your retirement provider, you're going to want to post that retirement contribution as an expense, right? So the match will be an expense. If you are making that payment on your behalf, you don't need to post that expense at all, because when you make the payment out of your books, that's when you'll post the expense. So again, everyone's books are a little bit different, but at the end of the day, you want to just think about how you're going to handle those and when you're going to post that expense. The other expense on your books, of course, is our fee, right? That's part of that. That's a professional fee that you should be posting to an expense that wouldn't get lumped in with wages or taxes or anything like that. I will say every one of our clients is going to have wages, employer taxes, and fees at a bare minimum. And all these other things are going to be on top of that. You want to make sure you break those out as well. When we look at insurance and retirement contributions from employees, right? Employees may be contributing to their health insurance or their dental insurance or to their retirement programs. Again, if Paper Trails isn't making those, you're going to want to post those as an outstanding liability on your books, right? Because if the employee is contributing 50 of the $500 a month to their health insurance, you can either post that as a credit to your insurance expense, which will reduce your expense on your books, or some employers like to post it as a liability on their books. And when they pay the health insurance bill, they reduce that liability. Everyone does things a little bit differently. There's no right or wrong way. But with a retirement contribution, for example, if you're making that retirement contribution, you really should put that as an outstanding liability on your books. And then when you pay it, you zero out the liability. So, because you want to make sure all those retirement contributions by law do need to be made within 30 days. So it's important that those are tracked. If you are making those payments, we can't have those sitting on the books. You're holding on to employees' money, right? So it's really important that you're tracking those and keeping an eye on that to make sure you're paying the entire amount of employee retirement contributions. Those are types of things. Those are definitely credits or potentially liabilities that will go on your books. Another item that we see a lot on folks' books is advances or loans to employees, right? You give someone $500 and you want to take it back $50 a week until they have it paid back. When you write that $500 check, what I would do, put it on my balance sheet as an outstanding asset, right? The employee owes you that money, $500, okay? That's an asset to the company. When you post the payroll, you credit that asset, $50 every time. After a certain number of weeks, that gets to zero. The loan repayment stops within payroll, and that should be zeroed out, right? But when you look at your books at the end of the year, if you are still owed $100 because that employee left or something like that, you want to make sure you have a way to track that, right? So these are assets on our books to be keeping an eye on. These are the most common components that are going to impact your books. We're going to look at the next slide is going to be talking about things that may or may not impact your books. And we'll take a deep dive into that right now. The next items are things that may or may not touch your books, right? Garnishments likely are not going to hit your books, okay? Because Paper Trails 99% of the time is going to make that garnishment payment on your behalf. So it doesn't need to be recorded anywhere in your QuickBooks. If we are not sending that garnishment on your behalf, you will want to post that as an outstanding liability, similar to a retirement contribution or insurance contribution, to make sure you're paying that to the agency that the garnishment is due, right? Same thing, we want to make sure that things are zeroing out on our books. And garnishments, like I said, are one of those outstanding things that potentially could need to be posted. Like I said, 99% of the time, garnishments are not posted because Paper Trails is dealing with that on your behalf. Everything flows through effortlessly. The next item is tips. So tips, if they're cash tips that the employees are just claiming, those are never going to hit your books, okay? That's the employee just saying, hey guys, I claimed $100, right? The only difference is you're going to pay the employer share of tax on that. You'll hit that as an expense. That's fine. If they're credit card tips or charge tips or gratuities that may be due, those likely will hit your books, right? When you post your sales to QuickBooks every week or every month or every day or however you do it, you're probably posting your tips as an outstanding liability, right? You owe those credit card tips to your employees. When you pay them out as payroll, you're going to reduce that outstanding liability. Again, in theory, should be zero because you're going to take in $1,000 in tips and you're going to pay out $1,000 in tips. So it's not an expense to your company in tips. It's not going to be showing up on your profit and loss. It should be a balance sheet item, but that may or may not need to be addressed if you're a restaurant or have tipped employees. Certainly something to discuss with your bookkeeper or accountant, how you're going to handle that if that scenario hits you. The last item, which will, if you're working with Paper Trails, will never need to hit your books, is the employee's share of taxes. The employee share of taxes, what happens is when we run payroll, we withhold their share of the taxes that are due, and we send that off to the state, to the IRS, and so forth. So because that comes out of their wages, there's no impact on your books. You're already claiming that expense as the wage, right? So the employee share of taxes never needs to hit your books. You are not paying those. It's not a liability on your books. It's really a liability on our books, which we're taking care of for you from Paper Trails. So you never want to post the employee share of the taxes only the employer share, okay? There's a couple of different ways to post these transactions, right? And it's really hard to narrow things down because every business is a little bit different. Every payroll is a little bit different. And it takes a little bit of analysis to do that. I will tell you the most common ways people are posting their payrolls in QuickBooks or whatever accounting system they're using is they're either writing a check in their check register and they're doing a split, quote unquote, split from QuickBooks. And we break that down, wages, taxes, fees, for example, $10,000 payroll, $9,000 in wages, $950 in taxes, employer taxes, remember, and then $50 in payroll fees, for example, right? That would be one way to do it. The second way to do it, which is more common with a more complicated payroll, is to create a journal entry. If you have a more complicated payroll with more items that need to be posted and adjusted in your books, most people are going to do a journal entry. And that journal entry could be very long. We have, like I said, we do general ledger reports for clients. We have one that they have so many departments and things that they track. Their general ledger report is like 3 pages long every payroll because they post every department, every tax, every benefit gets broken down by department. So they're very granular with that. That's very uncommon, but some people like to do that. And probably the best way to do that is to use a journal entry. Like I said, most of our smaller, easier payrolls, just going to write a check, do a quick split, break the most common things down. Let's take a look at what a journal entry might look like, right? So when I'm posting my payroll, this might be something that, this might be a way that we look at this, right? So we've talked about all of these different types of things as we're working on this. We talked about that bank transaction, right? So $62,000 is going to come out of this client's account, okay? That is going to hit their bank account. Debits and credits are a little funky, but taking money out of a bank account is actually a credit, believe it or not, in the accounting system. A little funky, but again, that's how that works. We look at our wages. We're going to debit. We're going to put an expense to wages in this account, $60,000. Remember, we talked about different reimbursements, right? So we want to break down our reimbursements so they're being broken down into the correct expense categories. So I'm going to post office supplies, $1,400. I'm going to post to travel or mileage, $649. So those are being broken out specifically different from wages. Again, expenses on our books. Employer taxes, remember employer only taxes, $4,800, that goes to a separate account. Then we look at all of our liabilities, right? In this situation with this client is making all of the retirement contributions and health insurance contributions and so forth on their own, right? We're not making those for them. So there's retirement payable, which means they owe $460 of employee money to their retirement company. So they want to make sure that that's on their books as a credit, which will go as an outstanding liability on their books. Same thing with health, dental, life, vision. Those are all going as credits on their books because that's money that the employee has either contributed or is, contributing to their retirement or insurance and so forth. Looking at advances, we talked about that. Again, they should on their books have an asset for however much they had advanced to that employee. And that would be, this would be reducing that advance on the books. Then we looked at the HSA payable. HSA is very similar to the health insurance or the retirement, where you actually have to send that HSA money off to the bank. $258 has to go to the employee's bank in order to be funded into their retirement program. Into their health savings account, not retirement program, so it's very important that that money gets off to those employee accounts as well. So this would put that on as a liability on the books. The bookkeeper will go pay that bill, send the money to the bank, and do that. Certainly something to keep a track of. And then the last expense item is the professional fees, the payroll fees that would go along with there. And that's an expense on the books as well. You can see in this journal entry, debits and credits always have to match. So those do match, which is great. And we've done a successful journal entry to post our payroll. So this is definitely a little bit more complicated payroll. Again, most of our clients, you're going to see wages, employer taxes, and professional fees, and that's about it. But as you start adding more deductions and more pay categories and different items within payroll, your journal entry you're posting in your accounting system is going to get more complicated. So Certainly have a conversation with your accountant to see how they might want things tracked, because every accountant has different things they want done when they're posting, when they're doing the tax return. So it's always really good to have that conversation, and make sure you're looping your bookkeeper in if you have a bookkeeper, to make sure that they know how to post things. So that's kind of the end of what we were going to go over today, the different components of how that works. I do want to just throw out, don't forget, everyone has access to myhrstuff.com. This is the employee self-service portal within iSolved. Go to myhrstuff.com. They can get their W-2s, pay stubs. They can update their direct deposits. Anything they need to do if they're using timekeeping, you punch in, punch out, request time off. If you're using our benefit module, you can do all your benefits enrollment, review those. We also have expense reimbursement and expense management now, where employees can submit expenses for review and approval to be paid out directly in payroll. So that's really nice in there. And if employees or anybody needs help getting logged in or can't figure something out, we have a lot of help articles, a lot of help videos at papertrails.com/help. And there's all sorts of information about how to, if you forgot your password, if you need to know how to update your direct deposit, how do I get my pay stub? All that stuff is at papertrails.com/help. So don't forget to use that as well. Do want to give a shout out, the iSolve Go app. If anyone's still using the iSolve Go app, that will cease to exist as of June 30th. So everyone really should be using myhrstuff.com as well. So next month, our training is on benefits administration, July 19th. Please go ahead and register for that if you want to learn about what we can do with benefits administration, open enrollment, getting that information off to your employees, tracking expenses, all that kind of stuff will be in the Ben Admin training next month. And I'm happy to take any questions. You're welcome to put that in the Q&A chat. You can also raise your hand and I can buzz you in, but we're happy to take questions on this topic. If there's something specific to you, please feel free to reach out to your payroll processor or to me. I'm happy to always answer any questions. We can certainly get things organized for you. Questions? Not seeing any questions pop up, but again, if anyone has questions after the fact, please feel free, shoot an email to your payroll processor. We will get right back to you and get you some answers on whatever your accounting questions may be. All right, thanks so much. We look forward to talking to everybody next month.